Hello guys, today I want to bring you a very important video. Let's talk about my strategy for this year, 2023. So, before we talk about my investment strategy, I want to talk about a very important subject. Let's talk about the current market situation. So, we are in the end of the earnings season. We are in the end of the last quarter, the fourth quarter of 2022, and we are expecting the S&P 500 earnings to be around to 15 to $20 per share. That was actually a good year. Nobody was expecting that. Everyone was expecting a recession. We didn't get it because the economy was really strong, even with all the rate increases, which was really awesome. And for this next year, the 2023 year, analysts are expecting S&P 500 earnings to be around 220 to 25. Sometimes, most of the time, analysts are really bullish. They are always expecting a lot. Maybe it's not a conservative expectations, but if the economy stays strong, uh, as it have been in the last year, so analysts are expecting a really slow start in the first half of this year, but a strong recovery on the second half. Let's continue. So at the moment, the S&P 500 is trading around an 18 PE and a forward PE around the same value. Uh, uh, an 18 PE for the S&P 500, most of you could say that's above the mean, but we are in a different time. I think with the economy is different in the last decade than it was in the the 60s, the 70s, the 80s, for example, or even in the 90s. But that's a whole lot other subject, and it's a subject for a whole video. But let's not talk about that. I believe that a fair PE should be around 15 and 20 for the economy we have right now. To be under the 15 PE, we have to be in the crisis and a bad economy, but that's not what we have today. We have a problem with inflation, which is being solved. Um, so, what should be the fair value of the S&P 500? Um, since we have still high inflation, the CPI is around 6%, I think. Um, Maybe you should trade around the 15 PE, but markets are smart. Market is always forward looking. So if we are expecting the inflation to continues to go down, the rates to stop and maybe a little cut, maybe is always thinking about that. So maybe a fair PE will be around 18. I believe the PE should be between 16 and 20. So if you have a 225 earnings this year and if you trade 18 PE, the market should be trading the S&P 500 around 4050, which is the value we are trading right now at today. But if you look to some analyst forecasts, they are expecting to trading in a range. We don't know what will happen in the future, but the most, in my opinion, the most probable scenario is that we'll be trading in the range of the 2800 and the 4200 for the S&P 500. In the next 6 months, maybe 9 months, I think it will be that range. if the most probable scenario turns to be true, which is inflation continues to go down, the Fed funds rates the Fed increased the rates to 5.25 or 5.5. That is what the market is expecting, and if when they trade around that, they will stop, maybe around in the early summer this year. And if the earnings continues to hold strong, I think that will be the range we will be trading. So that's the current situation. So what we'll should do in the next month and for the next year. So since we are a long-term investor, what we want to do is a DCA, dollar cost average. My plan is to do dollar cost average every month, buy the companies I like every single month. But since this year starts, I was full invested in the beginning of the year, but the S&P, the Nasdaq, the stocks really did go up in the beginning of the year, and they were trading around my highest part of my trading range, so I didn't buy in the last 2 months. Actually, I did my first buy this year around in the last 2 weeks. I can make a video telling you what did I bought in the last 2 weeks. So I believe the best strategy for most people in this for most people should be investing in a low cost index fund. If you don't want to make the research to try to beat the market, that's what most of the people do, and do the dollar cost average in this ETF. These ETFs like SPY, VOO, QQQs. But since I want to make the research, improve my process, and trying to beat the market, that's what I will do. I will do dollar cost average in the companies I like. When we have some dips in the market, I will try to increase my dollar cost average to buy even more. And my main purpose is to buy quality companies at a reasonable price. So since I'm trying to increase my portfolio to invest in my future, I'm here to buy the best quality companies at a reasonable price, so we can beat the market. That's my purpose, my objective in the next months, even years, since I'm young still. So that's my strategy for this year. I think you should buy every month. Market is trading at a reasonable price. I think you still be trading in a range between 3,800 and 4,200. For us to break this level, for something bad should happen or something really good should happen for us to break the 4,200. I think it's not be in the short term, in the next few months, but what we should do is invest every month, increase our savings, and that's what I expect to do in the next few months. So I hope you find it useful. If you like, and if you want more videos like this, please subscribe. Bye guys.